Aussie borrowers are finally getting some long-awaited relief, with the RBA confirming its first interest rate cut since 2020. The Reserve Bank dropped the cash rate by 0.25%, a move which could see the average homeowner save around $1,200 over the next year. But while the big four banks have been quick to pass on the cut, economists are warning Australians not to get too carried away. To help break things down, Australian Banking Association CEO Anna Bligh joins us live in Sydney. Good morning to you. So the big four banks were very quick to say they will pass on these rate reductions, but they won't actually kick in, will they, until about February 28th for three of them, March 4 for Westpac. Tell us why it's going to take that long.
Well, good morning, and I should say it's not only the four big banks, but increasingly the smaller banks have all been announcing that they will also be passing on the rate cut in full, and that's welcome news for borrowers, no matter who you bank with. These things are important to get right. Banks will be passing this on literally in about 10 days' time. If you think about the size of these organisations and the amount of customers that they have, making sure that they get that pass through accurately is important. But it will make a big difference, I think, not only to people who have a mortgage, but it's a great sign that inflation is coming under control. And that's going to matter to everyone, even if you're a renter, because it will mean that you're going to see moderation in that inflation figure affecting groceries, prices across the board. And I think after some tough economic times, Australians will welcome that news.
Yeah, I'm sure you're right. So explain to us why they calculate the date for about, 9 days and sometimes 13 days' time, when a lender like Athena said, we will calculate the cut from yesterday. Why the big four banks, with all these very smart people in them, have to take, 10, 13 days to calculate it?
Well, as I said, I think it's largely a feature of size. These organisations have literally millions and millions of customers, and they've got an obligation to get it absolutely accurate.
They kind of knew it was coming, though, didn't they?
Anything else? Well, you can think about it, you can forecast it, but until you actually hear it from the Governor of the Reserve Bank's mouth, I think nobody's going to take anything for granted. But I should say it comes much, much more quickly than a rate increase. Banks are required, when they increase rates, to give 30 days notice. So depending on when your mortgage payment falls in the month, it can take anywhere from 6 to 10 weeks for an increase to apply. So I think getting the whole thing done in 10 days is much more welcome than a rate increase, and even no matter how long it takes.
So why does this Athena lender take like 1 day to do it? Have they got better people working for them?
As I said, I think it's a feature of size,
right.
And every bank has different systems. So, they're all doing their best. They're getting it out as fast as they can. They have in the past averaged about 30 days. They've now got it down to 10. But I think the bigger picture here is that Australians who have been doing it tough, that have been putting in the hard yards, can see that their pain has now paid off, and they can see that the trend is most likely to continue to go down. It may go at a slower pace than we might like, but I think that gives everybody a sense of hope, and that's a great thing after some really tough economic times.
Okay, Anna Bligh, thank you very much for your time today. Here's Sherbo.